Why are you keeping your savings in a traditional savings account when a Patriot Bank Money Market account could be earning you significantly more? That was the question I asked myself a while ago, and moving my cash was one of the best financial decisions I've made. Now, I'm talking specifically about Patriot Bank's money market offering, and based on my experience, the strategy boils down to 3 key points: maximizing the tiered rates, maintaining the minimum balance, and understanding the role of liquidity. The power of tiered rates. The first and most critical strategy is leveraging Patriot Bank's tiered interest rate structure. Most standard savings accounts offer one flat, low rate. Patriot's money market, however, rewards higher balances with progressively higher annual percentage yields, or APYs. My personal target, my goal has always been to save enough to hit the bank's highest available tier. For Patriot, you need to look at their current rate sheet. Historically, the best rates kick in at higher balance amounts, sometimes $100,000 or even $250,000 and up. I systematically moved my emergency fund and any short to mid-term savings goals into this account to cross these thresholds. Once you're in a higher tier, that better rate is applied to your entire balance, not just the portion that crosses the tier limit. This compounding effect is the true engine of higher earnings. The non-negotiable minimum balance. The second, non-negotiable part of the strategy is maintaining the minimum balance to waive the monthly fee. The math: Patriot Bank's money market accounts typically have a monthly service fee, around $7.50 to $12 is common for banks, but that fee is waived if you maintain a specific average daily balance. I noticed Patriot Bank's required minimum to waive the fee is often much lower than the minimum required for the top APY tier, often around $2,000 to $5,000. The takeaway: you absolutely must keep at least this balance to avoid the fee. If the fee eats away at your interest earnings, you defeat the entire purpose of a money market account. If you can't maintain the fee waiver minimum, then a free, basic high-yield savings account elsewhere might be a better short-term fit until you can build up your capital. Liquidity strategy: where to park the cash. Finally, you need to understand what this account is for. A money market account is a great place for highly liquid cash you might need within the next 1 to 5 years. Think of it as the ultimate parking spot for mid-term funds. My use case: I use my Patriot Bank Money Market for my emergency fund and for down payment savings on major purchases. It gives me a high, variable rate, which means I benefit when the Federal Reserve raises interest rates, but still allows me to access the money quickly via check writing or transfer if I need it. The transaction limit caveat: remember, it's not a checking account. Patriot Bank, like all money market accounts, will limit your convenient transfers out of the account per statement cycle, usually 6. My strategy is to keep my day-to-day checking money separate and only use the money market for true savings and occasional, planned large expenses. To summarize my personal strategy for higher earnings with the Patriot Bank Money Market: consolidate your liquid cash to hit the highest tiered APY possible. Make sure your balance is high enough to waive the monthly service fee, and treat the account as your flexible, high-interest home for midterm goals. With that said, thanks for watching, and until next time.